We are about to witness the rise of one of the most historical XRP bull runs in history. Why is that? Well, because this bull run is going to be so different than any major run in crypto history. Let's first start off with this post. It's titled London Blockchain Finance Summit Maps Path to Tokenization Scaling. I did include this vaguely in a video recently, but the main thing that I'm looking at here is that there was a ton of major players at this summit. The core focus here was tokenization, and more specifically, how we can start to scale this. And the key focus areas were, of course, regulatory clarity, transparency, and ZKPs. Now, so far, we're starting to see the regulatory clarity side being worked on. We know MiCA is a big thing in Europe, but also we look at transparency and ZKPs. So transparency, most public blockchains already have the transparency side of things kind of locked down within privacy layers and amendments. Like, for an example, the XRP Ledger already has that built in place. It's a hybrid sort of network where you could have public and private blockchain features, which is definitely a big thing. But then we also think about ZKPs, or zero knowledge proofs. Another key factor that Ripple and XRP already have in place. So if we think about what needs to be in place in order for tokenized assets and tokenized asset value to really kind of scale, the XRP Ledger already has every single piece built into it, already locked in. It's almost as if Ripple knew about this and prepared for the future. And I think that's crazy to me. And sure, you might say, Nick, you're crazy for, thinking that, but it just feels as though, Ripple and XRP are always 2 steps ahead. Like, it feels as though they have some, extra information, if you will. But if we also go over here, we do have from vet_x0. This is from March 14th of this year. I'm bringing this back up because I want you guys to understand that, yes, every single step of the way, they're ready. Lots going on in the XRP ecosystem. Rise of AI utilizing protocol development and vibe coded projects. FX markets coming on XRP. Fresh stablecoin launches. Privacy with ZKP to enable confidentiality on the XRP ledger. And again, this is what I mean by, XRP being 2 steps ahead. They already have that hybrid approach for public and private blockchain initiatives, but also the ZKPs for, it's basically, when we come back to the whole idea of like institutional players massively adopting these public blockchains, all of these steps here are needed. They're all needed. Prototyping new features left and right, derivative sidechain, quantum proof algo on the XRP Alpha network, programmability efforts with smart contracts and smart extensions, formal verification and specification of key XRP components like consensus, native compliance tools for institutions, ETFs plus DATs like Evernorth, a lot of global community initiatives from meetups to conference, eyes on us. And yeah, I have never taken my eye off of XRP at this point because it's been non-stop growth. But on top of this, we go over here. This is from the head of research at Bitwise. We are constantly asked, what's next for crypto? And will there be another crypto bull run? As Matt put it, here's the answer. The next crypto bull market will be about stablecoins, tokenization, 24/7 trading, instant settlement, and institutional DeFi scaling to the trillions, disrupting finance the way the internet disrupted media and shopping in the early 2000s. I love this answer. I find it clarifying and exciting. The industry has long celebrated the rise of stablecoins, DeFi, RWAs on blockchains, and chanted the institutions are coming. And it's finally happening because the elements enabling it are here and ready. Regulation. The Genius Act, payment stablecoins will go live in the next 6 months, and the SEC, the CFTC, and regulators around the world are crypto supportive. If the Clarity Act passes, that's a bonus. 2, institutions. The largest financial institutions in the world were never going all in on stablecoins and tokenization when the most important regulatory agency in the world was suing companies that touch crypto. Now, we have the regulatory cover and the technology blockchains that support that, 24/7, 365 trading at scale. And as a result, buy-in from institutions. These institutions, fintechs, payments companies, asset managers, exchanges, custodians, banks are all finally and actually coming. And then infrastructure. When it's difficult for crypto enthusiasts to use crypto because number one, the user experience is confusing or clunky, bridging, software, hardware, wallets, etc. And two, it costs several or tens of dollars to process transactions. And three, it takes several minutes for transactions to settle. And four, transactions fail as often as not. People will not use crypto en masse. We now have high-performing blockchains that support 24/7, 365 near-instant trading and wallets that look like and work like fintech apps. And real-world assets that Wall Street loves, like stocks, bonds, not NFTs, and meme coins on-chain and on-chain funds, vaults. Tokenomics and investing. Hype is the best example, but we'll see too many assets replicate this model. And yeah, this is just them kind of selling everyone the pipe dream on hype. But all of this is the result of extraordinary and unwavering efforts of builders, entrepreneurs, regulators, and legislators. It took experimentation, trial and error, determination, and brute force. It was not easy, but the light of the next crypto bull market is visible, along with the long-awaited convergence of TradFi and crypto and the massive disruption and opportunity it brings. It grows brighter every single day. And yeah, this is 100% true. Like, the next bull run here is going to be absolutely insane, because it's going to be all based on utility. And guess who's been telling us that? Brad Garlinghouse. At the end of June, we have here from Brad, financial engineering doesn't drive long-term value. Utility does. And here we have the video clip of him literally stating this. He just said on CNBC that long-term value of any digital asset is driven by utility, not financial engineering. On-demand liquidity volume hit 1.2 billion in quarter one of this year, up 45% year over year. That's not hype. That's product market fit. Institutions know. Do you? Check this out.
To see you.
Great to be back.
So when they were a seller for the first time in a while, strategy that is, that got a lot of notice. Do you think that started something?
I think it definitely started something. And, I think the challenge is it added some excitement on the way up. And now that's compounding on the way down as well. And so as we have seen, crypto is going to go through its cycles. Many asset classes do that. I think because they were using leverage, Michael Saylor would characterize it differently than leverage per se. But at the end of the day, it was leverage. And then you start to see that in a place that can actually compound negatively. Seeing the particular thing they have pegged at 100 now trade, I think 25% below par, is a pretty damning indictment. And I don't think that's helped the market.
Yeah, a ticker, if the booth is wondering, that would be STRC, which we're watching closely. There's been a lot of ink spilled on how Saylor protects the preferred, protects the currency, and protects the equity. Do you think one should come first?
Look, I actually think what should come first is focusing on what's going to drive long-term value. And I think that financial engineering does not drive long-term value. I said actually on CNBC 5 or 6 years ago that I thought the long-term value of any digital asset is going to be driven by utility. And if it's solving a problem at scale for real customers, you're going to see liquidity, you're going to see demand, you're going to see trust in that asset. Those things compound in a positive way. And I think if you're just trying to financial engineer and leverage and borrow more money to buy more Bitcoin, it's kind of like, look, I'm bullish on Bitcoin. I think I subscribe to the Warren Buffett expression of be fearful when others are greedy and be greedy when others are fearful. Now is the time, I think, to be greedy. But I also think, Team Michael Saylor wasn't focused on the right stuff, and that has hurt the overall market.
So what do you think the utility of Bitcoin is now?
Well, Bitcoin has definitely carved out, I think, a space as digital gold. And, there's all kinds of funny stories about when the Central Bank of Germany was moving $300 billion of gold. It took 2 years and billions of dollars to move it. If you wanted to move $300 billion of Bitcoin, you could do that in a pretty reasonable, quick way. So I think about Ripple's digital asset that we focus on as kind of our technology stack, XRP. The utility there is really focused on payments. And leveraging the speed and efficiency of that blockchain in a way for institutions. And we've seen tremendous demand. Last year, partly through acquisitions, we cleared $16 trillion of payments or clearing on the prime brokerage business. But last year, the percentage of that went through a digital asset was close to 0%. So the opportunity is to introduce and bring traditional finance, and Ripple's strategy from the beginning has been, how do we bring traditional finance into the modern architecture of blockchain? And now through some acquisitions, we have a tremendous opportunity to bring that in.
And there you have it, right? This is the long-term value of any digital asset. He even flamed Michael Saylor regarding Bitcoin. And yeah, the long-term value of any digital asset is going to be driven by utility. That's the core focus. The next phase here is utility. We even have here, being optimistic is the alpha, zero doubt. Game-changing features coming to the XRP ledger, institutions and projects coming on chain. XRP is everywhere, and so is the community, with builder events around the globe. Utility drives long-term adoption, and the XRP ledger is the lean, mean settlement machine delivering it. On-chain is the new online, and we are looking good in this environment. And yeah, the XRP ledger never looked better. All of the features, everything happening here, XRP is on a completely different level. It is probably one of the key enablers in the space of institutional adoption. But also, we have demand for XRP keeps growing. More access, more ecosystems, more utility. And updates like this are happening every other day. And let's not forget that when it comes back to prior cycles, XRP has a long history of explosive price uncoilings. Institutions are acutely aware of XRP's ability to outperform the entire market in a short period of time. This occurred on several occasions and caught the masses off guard every single time. It's important to recognize that these periods of outperformance were driven purely by speculation and the token's characteristics, not by utility adoption, ETFs, or regulatory clarity. Excessive speculation alone was enough for XRP to deliver higher returns than the rest of the market. The crypto market is now shifting from pure speculation to utility-driven price action. Utility is a far more powerful and sustainable force than the hype that drove XRP's moves in the past. Explosive price action will return for XRP. It will be even stronger this time around. This is your warning. And yeah, I do agree. I believe that XRP this time around is going to perform extremely well. And it's going to shock pretty much everyone because, again, obviously this cycle would be much larger than any other cycle in history if the entire game is changing like this. And even Monica Long doubled down at the end of June, stating that the future of payments will be multi-chain, interoperable, and built on institutional-grade blockchain infrastructure. Our focus is simple. Continue making the XRP ledger the leading blockchain for institutional payments and a natural home for the next generation of key regulated stablecoins while growing the utility and adoption of ROUSD and XRP around the world. So they want to make sure that XRP and XRPL are the leading blockchain for institutional players, as well as growing the utility and adoption for both ROUSD and XRP. This is extremely exciting. It's the clearest validation that we are going to continue to see institutional focus and demand for XRP. It also means that we're going to continue to see more and more utility coming from the Ripple side of things for XRP as well. So we can definitely think about acquisitions, possibly major expansions. Who knows? So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out, guys.